Hope everyone's having a fantastic start to the AM. Happy Monday. Hope you guys had a great weekend. Feel refreshed, recharged, and ready to go. Obviously curious to see what markets have in store for us here today, but not really in a mood to like rush it or force it or overtrade or do anything along those lines. Last week was an incredible trading week, right? It was my strongest trading week of the year by honestly a long shot. So trying to make sure that I don't make any dumb decisions or force anything here today, or just like try to trade to feel alive. That's probably not the way to do things. So let's see how things kind of shape up here this morning, see where momentum kind of creeps up, and then we can go from there. Besides that, like I mentioned, I was planning on closing a few accounts on Friday. I did end up doing that. So as fun as it has been trading 13 accounts, I am back to trading 8. So that's not too shabby. I'm sure it'll be fine. And I don't really have too much else to say besides that here this morning. Let's see what markets have in store for us. Let's see what volatility is in play, and then we can go from there. So economic calendar wise, right, we got to get this all set up. Nothing too crazy. We're going to have CPI, PMI all on Friday. So starting to get a little bit of compressed calendar to a certain extent. It's like weirdly small, but fine. And then this morning on ES, I mean, we're still very much inside that Friday range, right? So just minimize this for a sec. Last week was an inside week, even though the volume was incredible. And yeah, curious to see this to keep going. I think all things considered, right, if last week was an inside week, that's probably better for bulls than it is for bears. If bears couldn't destroy basically the momentum, couldn't push price action lower, couldn't establish anything, then there's not really too much desire for me to like blindly want to go short. You'd have to get a pretty strong narrative to create those scenarios. So I would say for now, probably path of least resistances to the upside, and then it can go from there. Primary reason why I closed my Top Step X accounts was because of the slippage that I was getting on them. So the fills that I was consistently getting inside the Project X platform were significantly worse than any of the fills I was getting in any of my other Trade of 8 based platforms. So it just didn't make sense to keep basically keeping my execution complicated and having multiple execution windows, but then always getting a worse price or a worse fill or a worse exit. So I just don't want to deal with that. Eventually, at some point, I'm sure I'll open up more accounts or just focus on trading personal. But I didn't like the slippage on Project X. No, I did not. I've had those accounts for like 6 months, maybe 7 months, maybe longer. All right. Enough of pocket watching. Let's get after it here. So ES, right? Green candle, decreasing volume, gap up. What the heck? So we're looking at a 2 out of 3 to the upside without volume. And then we're looking 67.40 probably is our starting point here. That should be already there pre-market. So the next point to our left is 67.50. And then we're going 70 and then 800. So we'll split that up 10 points along the way. 67.60. Okay. And then to the downside here, pre-market low is 66.94.50. So let's call that 6,700 as our starting point. I think that's a realistic target. Oh, this should be 68. So 67, and then, I mean, our lows are going to be like 66.30. All right, sweet. NQ, so better volume on NQ than we have ES, right? Better indication of trending price action, a 3 for 3 here to the upside, right? Green candle, increasing volume, gap up. We're looking at a 25.2 as our starting point here. Maybe 25.3 as an indicator, right? You know, unless we have a range of less than 25 points, we should hit, you know, 25,200 with the indicator. So fine by me. I don't think we're going to hit 26,000 here today, but might save me some work later on in the week. Even though it's a 3 for 3, I do think it is somewhat reasonable to have a bearish bias as well, right? Until we break out of Friday's range, this maintains a two-way tape. It's been 1 day green, 1 day red, 1 day green, 1 day red, right? 1 day green, 1 day pre-market green. So until we break out of this range, it's really hard for us to say that we've got trending price action. So I'm going to maintain some flexibility in either direction. But the bear case is with extreme prejudice, right? I'm not going to be super aggressive wanting to trade a bearish narrative here. And we're looking at 24.9 as our starting point. And then we're going down towards 24.7, 24.4. And again, I just split up the difference, right? 100 points along the way. And I always round down to the nearest round, or nearest round up, or round down to the nearest round number. Oh my gosh, I can't type. Wrong number. What is going on this morning? All right, there we go. Okay, CL. I haven't tried logging into my account yet, but yeah, if you guys have any Top Step accounts, please, right, make sure that things are working fine. I would also imagine that a lot of other prop firms use AWS as their server, right, whatever you want to call it. So, hey guys, nothing you can do about that, right? If that's the case and you're annoyed, go touch grass, and you don't need to spend the day watching. Nothing you can do about that, right? So leave it at that. CL, green candle, increasing outlier volume, gap down, 2 out of 3 with volume. Sets up kind of like a mean reversion opportunity. Still looking at 57.50 as our pre-market. Look, guys, until Top Step gives you the all clear and says that they're fine, you should not be even thinking about placing a trade inside your Top Step platform, right? You are just setting yourself up to get screwed. Be proactive, not reactive when it comes to these types of things. Save everyone the headache, right? I'm going to go NA on the bear case here. Primarily, right? Because even if we do get good follow through, we've already had a really big amount of downside action. So we're going to be very capped with what we can do here on a CL perspective. All right, Apple 3 for 3. Tesla, 3 for 3. Like if they're saying they are having server issues, don't flirt and think that you're going to get away with it, right? Don't flirt with disaster. Just take the day off. Nothing you can do about it. Okay, red candle, increasing volume, gap up. Weak 2 out of 3 with vol. NVIDIA, green candle, decreasing volume, technically a gap up. AMD, red candle, decreasing volume, gap up. So 1 for 3. Meta, inside bar. Netflix, inside bar. A lot of inside bars, actually. Interesting. Google, technically increasing volume, so 3 for 3 to the upside. And then the old Vixaroonie hanging out at 20, spot 1-2. So still just an absolute beautiful amount of volatility in store for us here today. Let's see how it comes together. Any questions here this morning, team? How's everyone feeling? Morning, Kiki. Ah, well, it's nice to fall in love with the regular season, Logan. All the guys, well, it seems like a good attitude. Everyone seems refreshed and recharged here. So excited. We got a couple minutes till market open. I'm gonna go make myself a cup of coffee before before the day starts here, and then Logan, you'll hear my response. All right, so I am back. Yeah, guys, so if you have a Top Step account here this morning, right, don't trade, paper trade, or take the morning off, whatever it is. Please don't make things worse, right? Please don't. They will send an email out to everybody given the all clear. So please, guys, if I have to help you guys with a Top Step issue because you overtraded or you traded when you weren't supposed to, gonna tell you to F off. All right, so let's see how the day creeps up or how things behave here this morning. 15 seconds till market open. But guys, tech issues happen, right? They are a part of the game. and there's nothing you can do about them, right? Like even when I worked institutionally, we'd have days where data feeds wouldn't work the way that we expected, or we'd have to go. We had like literally a backup office that we would go to if everything was down, and we would trade from there. So it just happens. It's a part of the game. You got to suck it up. All right, let's see what markets have in store for us here this morning. Again, focusing on the old NQ. She's my favorite. And let's see what's in store here. All right. So good size opening range here so far, right? 70 odd points, pretty punchy. Let's see. All right, 50 seconds left on this candle's close. Not bad on the 2-min as well, but we'll let that develop for a little bit prior to being aggressive. Straight line higher up on ES as well so far. So pretty much green across the board to start the AM. See, a little bit too early for us to chase any of these setups here yet, but a promising start for sure. And really, like the main thing, guys, we're looking for a breakout of last Friday's range, right? That markets have been stuck inside that range until we break out effectively through all-time highs or through what probably is going to feel like all-time lows if we get to 163 again. There's no need to be too aggressive. Like last week, although it was a fantastic trading week, it was one day up, one day down from a daily candle perspective with good volatility. So we didn't make money last week because it was a trending market. We made money because there was good volatility. And that's not a bad thing, right? That's not anything to complain about. Like long may the volatility continue, but again, goal here, like every day, is a one and done. We'll see if something comes together to accomplish that. Unlikely for us to get increasing volume here on the second candle of the day, right? Pretty punchy open. Maybe this is where the 2-min starts to shine a little bit. But again, we'll keep watching. We'll be very patient here. So far, so slow here. Yeah, TopStep is saying that their servers are down with an AWS outage. So if you have a TopStep account, guys, please do not trade it. They're asking people to not trade. Okay, doesn't look like it's going to be increasing volume again. Still decreasing on the 2. Oh, we have an active setup, but we don't have any volume confirmation here yet. Right. It's a breakout from inside or away from the opening range, but it's not supported by a volume thesis here yet. No rush to do anything here. So, Skippy dude, confirmation is always the same. It has to be increasing volume relative to the previous bar, and it needs to be outlier, which is above that white line. And so maybe we have a chance here. Probably not a strong enough candle shape right on that 2 min. That's an arrow that's pointing down. It's a candle that looks more like a least bullish than a most bullish. So I'm going to say a failure on confirmation. So we're going to wait. It does feel like the way that price is moving is very sticky almost. Maybe a weird adjective to describe it, but kind of a weird open so far. And not a big deal if we get a consolidation day. We haven't had one of those in a while. So it wouldn't be necessarily too surprising. So I tried to just send a test order there with Tradeify, and that has been rejected. So it looks like we might be unable to trade pretty much across the board with prop accounts here this morning. Seems like a lot of them are having issues. That's a trade evade based issue as well. This says order rejected. To learn more, please contact your broker. So we got some work to do here. Like just might be restricted from a technical perspective. Heck, even some of my favorite podcasts this morning didn't get to launch in time to listen to them. I mean, I wouldn't say that volume's been weak by any means this morning, so I don't know where that conclusion comes from. Volume has been fine. I don't think it's got anything to do with that. Yeah, the volume isn't the issue here. It's the ability to be able to execute trades how you expect. Other word of warning, right, is if you're having if we're having AWS issues, right, there's going to be a lot of other suppliers that have them. Your trade copier here today, if you have one set up or are using one, is much more likely to have some screwy issues. So just be very careful with that, please. Again, good volume, but bad candle shapes to support that volume. So it looks like it might just be a slower start anyway. At least the coffee's warm today. Again, not a big deal if the market forces us to slow down for a day. Last week was insane. In a good way. Last week was a very good week. Well, I think it's both, Roberto, right? It's because my process was good, my P&L was excellent. Like objectively, last week was my biggest trading week of the year from a P&L perspective, but the only way you get there is if your variables are sharp, right? If you're executing your technique, you're following your plan, you're ready to execute trades when they set up. So you can't have one without the other. Like it was a combination of good process and good volatility that created big P&L, right? That was the reason why it was a successful week. So still nothing here, right? Still nothing. Nice, Tony. Good luck. There's no market's not slow right now. The range on the day so far is like 100 points. It's huge. So a very big moving market. What's a consolidation day, Kobe? So consolidation, right, is a day of compression or a day where the market catches its breath, right? So you have 2 or 3 possible days, right? You have trend day to the upside, trend day to the downside, no trend. No trend would be a day of consolidation. We should understand these definitions by now, though, to be honest. Because market's not been like watching paint dry. It's moving fine. There's lots of volatility in store. There's still lots of range. Still very similar to how it behaved last week. So again, stop imposing perception onto how you think it's moving. Not necessary. Just because we haven't had a trade in 17 minutes doesn't mean it's slow. All right, so potential here, right? Potential here. And we'd like to see that little fake out first. So let's see. Basically, want to see 200 act as support here. So no rush yet. I haven't drawn out that reference price, right? So I'm not looking for an entry yet. I'm waiting to see where this red candle establishes support, if it can create that little fake out for me. Oh, still got time here. You guys, just as a heads up here, right? I'm getting a lot of DMs right now with people asking questions about setups and things along those lines. If you have any questions, please use the live chats intraday. I don't have the ability to go through and answer everyone's individual DMs during the middle of a trading session. That is why the live chats exist. Please use those features, guys. I will not be able to respond to DMs in a timely fashion during the trading day. So please, please, please use the live stream chat for those conversations. So still no real fake out lower, so no reason for me to jump in yet. Still being very patient. So only active on the 3 min, so still waiting. It's an okay candle. I wouldn't say we're quite dead here yet, but still want to see that fake out first. I've not really gotten a fake out. And if we're stuck, right, still inside Friday's range, which we still are, and that's last Friday's, right? So we're still stuck inside this candle's range. We want to see the other side fail to give us that smooth narrative to the upside, right? We want to see one side basically give up so that we have a like a cleared path for us to go through. Because when you're still stuck inside the range of another candle, the area where resistance is going to come in can potentially be random. So if we get that clearance out of the way first, right, or we see one directional side of the trade fail prior to our entry, we elongate where that next defense effectively occurs, right? Bears or bulls can't load up every 5 points. They can fail and then redefend a handle later or 50 points later or whatever it might be. So that's why we want to see that one side fail aggressively, because it's like, it's starting to snow here, which is starting to get really depressing, but it's like you get a clear road, right? Once the snow plow has gone through. Kind of that same concept, right? You have a smooth road to drive on. It's not going to be covered in ice. And that's kind of what we're looking for here, to use a very seasonally depressive analogy. And again, still no entry. We've not missed out on anything here yet. This might be a little bit too much information for you guys, but my favorite thing about the snow season is hot tubs outside when it's snowing. There'll be days every, maybe a couple times a month where I don't get a trade in the session. That happens. I wouldn't say like super often, but it happens. Like not every trading day, not every day where the market is open is going to be a trading day. Sometimes it just doesn't give you the look you want, and that's fine. Oh, it's the best, Kiki. Yeah, it's the best. You have a I don't know, like a cold beer or a nice cocktail while you're in there. It makes you feel so special. Dude, I would probably trade some sunshine for you. Oh yeah, I use the sauna every day, Paco. So my my de-stress routine after the trading day, is jump in the sauna. So it's usually the first thing I do once the trading day is over. I jump in, I purge my toxins, and then I get on with my life. YouTube, NYC Pug. You can use YouTube, use the audio from Discord. You have the backup link in YouTube. So guys, everyone overthinks the reference price thing. All I'm doing is I am getting myself, it's effectively random. Well, I mean, not really that, but I'm looking at the first candle to the left, first point to the left where I think there is support, right? And so all I'm doing is when I draw up my reference price is I'm giving myself a binary. I'm not necessarily being too picky about the actual price. Don't necessarily care about that too much, or like how I get to it is not that important. It's that I then give myself a scenario once I'm inside my entry zone. So let's say that this is my entry zone. That's a big spot to pick an entry, right? Where I have to then emotionally think, oh, is this a good entry or not? But if I draw my reference price, I can make that event to be a binary. Either it's under and I should click submit, or it's above and I don't have to click submit. So the reference price for me is more about removing the emotional element behind an entry. It's not necessarily based on a technical element. It is literally just, where's the first spot where I think I should draw it? I'm not thinking more than that, right? I'm not thinking, oh, should it be 225 or should it be 216 or should it be 212.75? I'm just thinking, okay, where's the first spot where I think it could pull back to where I could get the position sizing I want? Sweet, let's make that a binary thing. Either it's above or it's below. That's it. And I draw that reference price, guys, not for anyone's benefit but your own, so that you all can see where I'm looking for an entry, right? So people complain all the time that I don't give you guys any heads up over where my entry is. And when I get that feedback, I laugh, because that's what the reference price is, right? I'm giving you a 10-point window where I'm looking for my entry, or a 7-point window where I'm looking for my entry. And that's it. So it's a visual clue. Same thing with the Fibonacci tool. This doesn't actually do anything besides help people visualize what profit target is, what stop loss is, and then from there. This doesn't actually tell me anything new, or doesn't give me like some edge from a technical perspective. This is just so that you guys can visualize my setups better. So the reference price, right, is the same thing. It's so you guys can visualize where I am looking for an entry, so that you can plug it in on your own trading view and then watch as price action pulls into that. And you don't have to wait for me to say that I'm in. Right? Because when I draw it out, as long as I don't get like a rug pull, basically move back into my reference price, I am going to be clicking submit. Does that make sense? So that is how I visualize or share with people what I am going to be doing, so that people don't have to chase, right? Sounds really cool, James. So the reference price, right, is so you guys have a reference for where I am looking for an entry. That is where the term reference price comes from. I'm not hiding what I am doing. I'm not doing any secret sauce, right? I'm trying my very best to be as transparent as I can be, and giving you everyone as small a window to look and be interested in as possible. Well, I would just say in general, when you get larger volume than your confirmation candle, you're being told that things aren't moving the way you expect, right? And then if we look at it contextually, this was our confirmation, and since then we've moved 5 points. So, you know, the context here becomes not necessarily the red candle hasn't validated it, But if confirmation is strong, it shouldn't take 20 minutes to then start to get some separation. That move should generally happen pretty quickly. Not happened here yet, so we're waiting. The other thing, just contextually, right, that we can kind of use as a clue here this morning is that overnight there was a pretty decent sized gap up, all things considered. Like we opened up, what was the open price? 120. So we had a decent gap up here this morning. Generally, when you have a pretty big gap up or you get some good overnight price action, it takes a bit of time for the market to kind of like find its rhythm type thing. So historically, when you get those decent gap up mornings, that's when we get setups, I'd say like 10, 15 onward, or a little bit more often we get those later moves. So we know that from that context. So yeah, so far nothing really we've missed, all things considered. Any of the breakout subs we would have taken probably would have stopped us out by now or given us a very small win. Yeah, for now we're still kind of chilling here, right? We don't have really any indication of like a momentum that we established early last week. So far been a bit slower. That's okay. Again, I don't mind the catch your breath day, right? Reset your dopamine. It's not a bad thing. And I'm not going to place a trade just for the sake of feeling alive. I got other ways of making myself feel good besides trading. So it's got to be perfect. Otherwise, I am not interested. So, yeah, good question about my journal pattern. I have a notebook in front of me that I fill in basically like my intrusive thoughts, basically, is what I write down. So, if I enter a trade and I feel like, yeah, if I feel like a trade is giving me anxiety or it's making me feel greedy or it's doing whatever, I try to write down those triggers or those emotions and why I think they happened or like what caused that to happen. Then once the trading day is over, I'll go through my notebook and my order history and I'll basically fill in then the other bits and pieces, right? So here was my entry price, here was my position sizing, here was my stop loss, Details that I don't need to track in the moment because they're tracked by my execution software. And then I go in and I fill it out. The other thing that I like to do is I like to watch back my trades. So I try to do that on all of them, and kind of get an idea of like what my internal dialogue basically was, right? Because I kind of go stream of consciousness in here. I don't really filter out anything for better or for worse. And so I kind of use that then to support were my thoughts valid or not. From there, how often I review my journals, kind of a little bit sporadic. So it depends on if I feel as if I have something that I need to fix or need to change. Like the last time I did a deep dive into my journal and I looked back for like a couple months worth of data was when I decided to switch to the fake out entry. Anecdotally, I was feeling as if I was getting faked out on too many entries. That was kind of like the intrusive thought that was running around in my head. And so then I went through my journal and basically looked, hey, was this the case? Was this the reality? Was my stop loss kind of always in the wrong spot for a few of my setups? And how can I change that? So it's like the monthly reviews don't necessarily exist. It's their reviews when I feel like I need to make a change and I want to see if my data coincides with the change that I think I need to make. Honestly, so much. Yeah, I'm watching here, handcrafted. I've got it up on my screen too. The reason why I'm not interested is it didn't hold above high a day. So it's like a little bit of a fake out on that increasing volume. So it's not a perfect confirmation. Same thing with the 5, right? So we're being patient. Like a big part of why I journal is because it helps with the 24-hour rule, right? So when you journal out your thoughts, you journal out your trades, you journal out your process, you kind of get that baggage out of your system. You don't sit on it. You don't like fester on it. You don't sleep on it. You kind of purge yourself of those feelings, and it allows you to take something to work on for the following day. So after each journal entry, I'm trying to give myself what's one thing I did well, what's one thing I can improve, what's one thing I want to focus on for tomorrow. And so then I clear my head of basically all my execution nonsense, right? Or all the execution noise is probably a better way of describing it. And then once that noise has been cleared out and I'm feeling objective again, then I'm giving myself something to work on, right? The following day to focus on besides a P&L number or, I want to be green or whatever. Usually it's one of close wins before they become losses, close as P&L is increasing, don't be greedy, right? It's usually one of those 3 things. And so then I have a technical focus that I can put my energy and emphasis onto the following day. Let's see this 5 min, how this behaves. Maybe on this 3 min. Good man, Earl. That's important. Yeah. Trading Zone's a fantastic book. Absolutely fantastic. I would say the only time where I do like a really extensive deep dive on my trading is always over Christmas. Trading in the zone, Sonia, trading in the zone. So over Christmas, I tend to not trade from like, call it Christmas Eve to about, the Monday after New Year's. And generally in that period, I'll sit down with a bunch of Lindt chocolate, probably a little bit of Bailey's in my coffee. And that's where I'll do like a really deep dive on my trading. here's what I did well, here's what I can improve, here are the patterns that I had over a long sample size. And then every other little, call it technique tweak, is based on just like market performance over a longer period of time. So my journal exists primarily so that when I go back and I look through my trades, I don't have to spend 20 minutes guessing why I made a decision or what my setup was or anything along those lines. It can just be it can be clear and obvious to me just by looking at my journal. That's the point of it, right? Because you're going to forget, heck, like even 10 minutes after a trade, you're going to forget a lot of the emotional stuff that you felt inside a position. And so if you can create for yourself that log effectively, when you do go back and you study your trading, you're going to get a lot more out of it than if you just have an Excel spreadsheet with your entries and your exits, because then you're not going to know what the hell you were doing. You're going to have to spend 20 minutes on each individual trade, rebuilding it, guessing how you were trading. And that type of data collection ends up being extremely unuseful. So for me, that's the whole point of journaling it. I'm trying to make future Michael's life easier by not having to guess the details that I would like to know 6 months from now. That kind of makes sense. So far, so slow still. I can't call that a fake out yet. Didn't quite make a lower low. And so, yeah, that's spot on, Earl. Like, it's why I've hired a video editor to cut up all my trades, right? So I can go back and watch them. That's a very nice feature for me to have. And you guys all have the same access to that, right? I'm posting every trade that's longer than like a minute. I'm posting it in the trade replays channel, or I should say Eric is posting it. But it's all there, usually 24 hours later. What I would say so far today has been like the speed that we saw last week, right? Last week, the moves that were happening a lot faster than what we've been seeing so far this morning. Today feels like very muted in comparison to even Friday or Thursday. Yeah, like the momentum, it seems like it's a catch your breath day, pretty much. Last week was the craziest week of the year, objectively, just from like a daily range, but still being an inside bar. Crazy. It was a huge tug of war. Like we would get 50 points in 30 seconds. Yeah, market's in the hot tub. It's recovering. Again, no big deal. And like all things considered, I don't really feel like I've been close to a trade yet, which is, I know, kind of boring. But it is what it is. Not every day is going to be a trading day. So I'm happy to sit on hands if that's what's required. I'm happy to to trade when, or happy to not trade when things aren't perfect, happy to trade when things are perfect. And so far, I'm just saving money. And yeah, Earl, I agree. Like the, oh man, it was an unbelievable weekend of football. But I agree, Earl. Like when things are slow, very, very slow, like they have been, where it's kind of like that, like, um, it's gonna maybe be a weird analogy, but in like World War One, they used to do these creeping artillery barges before people would storm the front line. So they'd be like, bombing artillery every like 10, 15 yards for 2 hours. And every minute they would creep it up another 10 yards, another 10 yards, and another 10 yards. When you get stuck in those types of bits of price action where it's like that dreaded creeping rally, I personally find it to be extremely like emotionally draining because you get no resolution, right? The trades where you're neither wrong right away or correct right away end up costing you a lot more mental capital. So I want to avoid those as much as possible. Those trades tend to suck. And so far, we've not missed out on anything. Maybe 15 points, maybe. And that would have had to been a compromise. 100%, Skippy, dude, because we all have X amount of mental capital. And when we drain it, we get really grumpy. I mean, I'll speak for myself. I get really grumpy. I get really snappy. I get annoyed easily. I don't trade well. I rush decisions. I compromise trades. I get greedy once I'm in winning positions. I start to like behave at odds with my trading rules, or like my ability to maintain control kind of evaporates, and I start to make really dumb decisions. And everyone has like a number that breaks them, right? That destroys their mental capital. Sometimes it's a P&L thing. Sometimes it's a number of decisions thing. Sometimes it's I don't know, because I've bitched you out too hard. Like we've all got a thing that breaks us. So we just have to be honest with ourselves over what that is. Then we chill. And protecting your mental capital, I think, is probably the most important thing we can do as a trader. Because none of us have ever blown an account with full mental capital reserves, right? It's always once we get that like to that out of body experience type thing where we know what we're doing is wrong and we're willing to do it anyway, that's when we start to open up ourselves to a lot of problems. So again, now we maybe have a setup here to the downside, but I'm still like hesitant about the speed of these moves so far. We always talk about elevator up, stairs down, or stairs down, elevator up, right? Just depending on the directional bias that we're looking for. At the moment, everything has been stairs, right? I've seen stairs up, stairs down, stairs up, stairs down. No real elevators of price action yet. So it tells me, right, slow moving market, slow moving day. It's fine, but also means that I'm probably not going to be able to satisfy my execution rules based on the speed of things so far. And yeah, your mental capital, just go back to that. That is your most valuable resource as a trader. The second you lose that control, you destroy your ability to make good decisions. You end up making decisions then based off of emotions or out of revenge or out of whatever nasty adjective you want to use there. And those are not good decisions, not profitable ones. Like if I were to be honest with myself as a trader, that's probably the thing I am worst at protecting is my mental capital. I am too willing to work until I am burned out and then work through burnout. And that tends to not be a very positive quality of mine, but I'm working on it. Oh, I'm a huge believer in that too, Sonia. Yeah, I'm very competitive about tracking my sleep score. Just getting enough deep and REM sleep makes a huge difference. I don't know, like I'm kind of a believer that being a professional trader is kind of like being a pro athlete, where you really got to take care of your sleep, you really got to take care of your diet, you really got to take care of like your performance based psychology to be able to perform at a high pressure environment every day. And so when we control those variables and we make sure that we're, set up for high levels of performance, generally better things happen to us. And yeah, the better night's sleep you get, the better your diet is, right? Whatever it might be. I feel like that adds a buffer to your mental capital and you're able to maintain control better and you're able to like snap out of it easier when you do catch yourself slacking. Yeah, really boring so far. Yeah, it is life, Sonia. The thing to focus on there to a certain extent, right, is to realize when your mental capital reserves are kind of exhausted and to understand like your triggers, basically, or what's going to happen to you when you've lost it, right? One of my favorite, I'll say this. One of my favorite things I've heard on the internet. So Tony Robbins video. Everyone can have their opinions of him. Whatever. But he had this video one time where he was doing a conference and he asked people if you had to see someone who was depressed at work, what do you think that they would look like when they were sitting down at their desk? And he said everyone had the same answer, where it was you'd be like shoulders scrunched in, terrible posture, short breathing. Like face as close to your computer monitor as possible. Like you're hunched over and not looking very, like you're not sitting in a straight line. And that for me became a very important visual clue or cue, because generally I know that my mental capital is being tested the second my breathing gets short and my posture gets hunched over and I'm like face as close to my P&L as possible, or I'm living and dying with each tick. And if I catch myself in that scenario, that generally ends up being where I'm like teasing with tilt. So the reset there is always fix your posture, fix your breathing. And if we can do that, then we can kind of like reset to getting back into control. Now, easier said than done sometimes, but that for me is always the same thing. And pretty much everyone has their version of that. It's always the first thing to go, our posture and our breathing. I like that, Jerry. Again, still no active setups here at the moment. Can't call this a fake out, right? Because it closed above our big candles low or high. So now we're looking to see if we can get like a breakout scenario maybe. But this seems like a market that's maybe a bit more committed to just being slow today. I'm not sure if that's a good thing. My vocal range is definitely very limited. I tend to get booed off the stage when I do karaoke. So again, if you're an artist, I'm not sure if you want that rattling around in your brain. 25 seconds here. Probably unlikely that we're going to get increasing outlier volume. Maybe on the 5-min, we could get a look. Again, so far, so slow. I'm not going to chase something just for the sake of feeling alive. It's got to be absolutely perfect here today. Been too much work over the last week to compromise today, right? That's not worth it. So I'd rather sip my coffee, get no action, than sip my coffee and get the wrong type of action. Okay, but with it being a slow market, I'd rather default to slightly longer time frames. Right? Like I like to switch to the 2-min generally when I'll answer that question in a second, Skippy dude. Generally, I like to switch to the 2-min time frame when things are moving fast and it can give me an appropriate risk reward ratio, right? So when I've got really quick trending action, switching to shorter time frames allows me to tighten up my risk profile. Today, I don't necessarily need that. So I would rather not have to deal with that noise and have a little bit more confidence in the quality of the signal when I don't necessarily have a very strong conviction of trending PA yet. So if last week wasn't as good as it was, would you feel more pressure to trade? The short answer should be no. I don't necessarily feel pressure to trade on a daily basis. And it depends on why the week wasn't a good week, right? Was it a bad week because of my execution? Was it a bad week because I overtraded? Was it a bad week because I didn't get my entries, didn't take profit? Like it really depends on the context behind it. Um, but generally, I should be not feeling like, or I shouldn't say I don't feel pressure. I for sure do, but the pressure I feel more is not to necessarily trade. I feel pressure to entertain more than I do to trade in general. I'm pretty stubborn in my trading beliefs at this point that I don't really care. Or I've got enough evidence to not have to care about the number of decisions I make. Um, but I do feel pressure to place trades so that everyone here feels like they're getting their money's worth type thing. That for me would be the thing that I fight more so than anything else. But I'm a big believer that I should always be entering a session with like a 0-0 scoreboard, right? So if I journal, if I do that job correctly, then I'm giving myself one thing to focus on each day, right? Okay, I need to focus on my take profits. I need to focus on my entries. I need to focus on closing out as P&L is increasing, whatever it might be. And so I can kind of like mitigate that pressure by giving myself a thing to work on or a thing to focus on. And I can try to isolate the problem in that context. But no, I generally don't feel the pressure to make back a losing week or to make back whatever. I don't know if that would be the right description I would use. And maybe we're starting to behave here a little bit on the 5. Again, I'm still not convinced I've seen elevator up yet. I've just seen stairs up, stairs down, stairs up, stairs down. Yeah, and like like I feel good this morning, so it's not like I'm not or I'm trying to avoid trades because I feel off for whatever reason. But like I think that's the other element. Like that's where I probably struggle the most as a trader is those days where I like wake up feeling like a bit exhausted or a bit burnt out or a bit tired. Those are the days where I feel pressure to still perform and to perform at a high level. And generally those days go fine, but they then exaggerate those feelings of like burnout or overwork or whatever it might be. And so that's where I would say I feel pressure more than anything else. Yeah, probably to phrase it the right way. I feel pressure to be here every day more so than pressure to trade, if that makes sense. All right, so we're still waiting for this 2 or this 5 min. And like I don't really feel like I've seen a elevator up all day here. I still think there's like, some fake out potential here. All right. Give this 5 seconds. All right. So we're now looking for a little fake out under this 264. And then again, we want to see it basically behave like a trampoline once it makes that lower low. It's a little bit better. See, this is the thing though, like it kind of gave us that maybe like 5 points of elevator price action, and then it's really slow and sticky again. And there's the elevator down. So I don't think this is quite ready for me here yet. Price action just has not behaved in a show of force yet. So I'm being patient. By the looks of it, I would say it's probably like an 80% probability I don't get a trade here today at this point. Because I can't objectively say that any of this price action here yet has really matched my criteria. We've had some confirmations for sure. We've had some setups for sure. But then just execution wise, things have been different than what I would expect. That's probably the nice way of putting it. And yeah, like not every day is going to have to be a trading day. Most days will be, right? I mean, I can get a trade most days. Today's October 20th. So it's probably, I would say like once every 10 trading days, maybe every 15 trading days. Things just don't behave how I want and I don't get any action. And that's fine. That's a total part of it. I don't have to force anything that isn't there. Again, we've not missed anything here so far, right? Like at best, we'd be up, I don't know, maybe 5 points. So we've not missed out on anything here yet, team. Okay, so maybe here again, we'd like to probably see a little fake out. Right around 300 is also a bit of a psychological curse. Again, kind of just a slow grind day. Hard to want to be hyper aggressive here. So just slow and steady here, slow and steady. So, question about my stop loss, right? Generally, when I am typing in my stop loss number, I'm just rounding it down to the nearest round number. So, generally, the spread on NQ is 2 ticks. So, if my stop loss on my red line was 264.50, I'd have it set at 264. There's a bunch of videos that I've put in the Discord about that already, Austin. The videos are called Techniques to Avoid Getting Faked Out. So I would review that. Just generally, I want to be getting stopped out when price goes under 264.50, not if it touches 264.50. The other thing, like, this drives me insane here too. But like, if it touches 264.50, 99% of the time it's going to touch 264. So like, it's very rare that it's going to get within 2 ticks of hitting your stop loss price and then not stop you out. So like, yeah, people tend to want to optimize for like outlier scenarios where I get faked out or you get faked out and I'm in a trade. It's just going to happen sometimes. There's not really like too much you can do to like avoid that 100% of the time. So the important thing to do with your stop loss is to just do the same thing each time, right? To be consistent in how you set it up and how you set your order. It really doesn't make a difference, to be honest with you. It's just get stopped out at the price you want or expect to get stopped out at. That's important, right? You should be getting filled where you expect to get filled. But yeah, like that's trying to solve for like an exception, not a rule. So it shouldn't be something to like lose sleep over. There will be trades where I get stopped out and you guys don't. There'll be trades where you guys get stopped out and I don't. There'll be trades where I get stopped out at one price and you get stopped out at another. There is always going to be like a little bit of slippage and difference and whatever. The point, excuse me, is to make your execution consistent enough so that when you're clicking submit, you're not getting like, oh, do I do this time? Do I do this time? Do I do this? Do I do that? Where it's just muscle memory and you can just watch price action. That's the whole point, right? It's why I do my stop loss, reference price, position sizing, ask to zero process each time, right? It's consistent. So I do the same thing every time. I don't have to think about it. I just get to execute trades. I can be quote unquote primal. And that's a lot more powerful to me than, ooh, I got the perfect stop loss price. Because that doesn't exist. No matter like what technique you try to use or what technique you deploy, there's always going to be times where you get faked out, no matter what. So yeah, like people only remember the scenarios where they get faked out and I didn't, or vice versa. And then that acts as like a confirmation bias. But that's like 1 out of 100 trades, and people lose too much sleep over that. So it's be consistent with your execution, because if you do the same thing each time and your technique is solid, everything else around your trading will slow down because you're not rushing to put together your order window. And that will create a lot of extra mental clarity for you versus anything else that could happen. Right. So it's the consistency of your execution that allows you to slow down your thoughts. And that's what's valuable. It's not the actual stop loss price. Now, obviously, if you're setting your stop loss when it's supposed to be 293 and you're setting it at 297, then yes. Yeah, Akeem, all you have to do is you have to click copy and save it as your own layout, and then you'll be able to access it. The link in the Discord, it's called the DTR indicator. That should be extremely clear. If you go through the start here section, it would also guide you through that process. So none of the resources in the Discord should be particularly confusing. So start with start here, and then 2 channels down, you'll have everything you need. So again, still just watching here. Not really seen that elevator, just been slow moving. But we're above 300. It's a reasonable opportunity potentially. But it's just been very slow. And maybe I jinxed it here a little bit today, because already in my trading journal, I've got like it all written out to fill in my details for trade number 1. So maybe I was a little bit too presumptuous here this morning. Yeah, weird volume. We were still theoretically in play here, but I want to see that bearish failure first and then elevator up. Not happened yet anywhere. Okay, let's see if this is the fake out spot. It's got to go under 293. So far, so boring. Yeah, I mean, I think it's setting up to be that realistically. And I maybe have some potential here, but just not getting the fake out, then elevator, right? So fine if it wants to just be a creeping rally, no biggie. I don't have to trade it if it's not perfect. Hell, if I don't place another trade all year, last week she paid for a lot of days of not having to trade. Made more last week than I made my first year ever working at a hedge fund. Oh, don't need to force something if it isn't perfect. Yeah, it's been fun, Kyle. It's been really fun. And it's not, I'm not been on fire because I'm some market savant. I've just been trading well because I've been following my rules, right? I made an adjustment to my technique, doing the fake out entry, and I've been sticking to it. So I'm not going to be willing to compromise here today just because it's not giving me those same characteristics. So it's like I'm not judging myself if price action moves in my direction. I'm judging myself based on if price action follows my rules. Right? If it follows my rules and in my direction and I miss it, okay. Yeah, I got something to beat myself up about it. If the market moves but doesn't give me my rules, right, for its movement, I can't and shouldn't care. Because like I can't torture myself for behaving how I said I was going to behave. That's not fair to me either, right? That's a lose-lose situation. So I should never punish myself emotionally when price action doesn't follow my rules. There's no FOMO there or anything along those lines because I know the only way I'm going to make money consistently is if I follow or behave how I say I'm going to behave. If I need to chase an exception just to feel alive, I'm probably going to screw myself over. Maybe not on that trade, but on the next one or the one after that or the one after that. So I'm just not willing to compromise. Not worth it. Okay, maybe this is our little fake out scenario, but we want to see elevator up. So far, no elevator. Oh, still no, right? Still no. Hey, sounds good, Kiki. Enjoy your next trip. Seems like every 2 weeks you're going somewhere fun. So can't really complain about that lifestyle. There's worse ways to live, but enjoy your trip. Eat some amazing foods, and I'm sure the market will still be here when you get back. It's not going anywhere. Or if it does disappear, we've got some pretty serious geopolitical problems we got to deal with. Yeah, don't say that. I don't want to. I don't want to get killed by a drone. Again, still not missed out on anything here yet. No elevator. There's no FOMO. Like I don't feel like I've missed out on anything. I don't feel anything along those lines. Price action hasn't behaved how I wanted it to, even if it went in a direction that I maybe anticipated it could have gone. That's fine. Like getting the direction right's the easy part. Being able to execute the directional move, that's the hard stuff. Again, continue to wait. There's another possible little fake out. And now this is, probably our first like elevator down we've seen, all things considered. But realistically, probably not going to get a look. Sounds good, Mike. Enjoy. So found some support off of 300. I don't know if that's enough movement. Still just no elevators anywhere. Oh, I think pretty close to calling it, to be honest. I'm not convinced I'm going to get a high conviction look here. Bit disappointing because there was good volatility to open the day off, but then just kind of muted since. So I'm going to go final call for questions here, team. Final call for questions. I'm not going to give it any more energy here. The indicator is a custom one. You won't be able to find it in a search of the indicators inside TradingView. You'd only get it from inside the Discord. So go to the Discord channel called the DTR indicator. Can't be much more clear than that. Yeah, you too, Joe. Enjoy, Jerry. It sounds like actually kind of refreshing. Sounds good, Roberto. Enjoy. Yeah, good question, Shiv. So, yeah, it will depend. There is a little bit of context behind it. I would say that it mostly depends on how much breathing room you have from your entry, right? So if you're 2 points above your entry price and it's giving you kind of a crappy close, then the emphasis should be to close as P&L is increasing. If it invalidates, but you're 20 points above, you have a little bit more breathing room to kind of let it figure out. Generally, the base rule I have here is that post entry, I should get at least 2 out of 3 things on my entry candle. So it should close with higher highs above my entry price. And let's say I got in on this candle, I'd like it to see it close above 322. So hold higher highs relative to the recent move. It should close on increasing volume and it should close with a strong candle shape. So if I get 2 out of those 3 things on my entry candle, theoretically, I shouldn't have many things to be afraid of. If I have 1 out of those 3 things, then I should probably look to get out or at least close as P&L is increasing. And then if I get 3 out of 3, yeah, I probably should, again, continue to trust it. But it is a little bit contextual. If I get 1 out of 3 things, but I'm up 20 points, I'm going to give it space to breathe because fundamentally I've still gotten the move that I've expected or it's behaved probably how I've expected. So yeah, there is a little bit of context behind it, if that makes sense. So like, yeah, I mean, I'd say there's 4 things I'm looking for, right, on a trade fundamentally. It has the move gone in my direction, right? Is it holding higher highs or lower lows? Is it on volume? Is it on a strong candle shape? The most important ingredient of that is how big the move has been so far. But fundamentally, on pretty much every trade I take, I should be green pretty much right away or red right away. So on any trade where that doesn't happen, where I get stuck waiting for it to separate, then my like flashing lights of paranoia should be going crazy because I'm not entering ever not thinking that it's going to go right away, right? If I'm entering a trade, I'm expecting it to move. So if it isn't moving how I expect, what else am I wrong about, pretty much? That's kind of the thought process there. All right, guys. Any other questions here this morning? Any other questions? Again, like this, right? We made a higher high and then it sold off. If I was in this trade and I saw that failed breakout higher high and then pull back to my entry price, that would be, hey, it's not behaving how I expect. I need to get out before it becomes a red trade, right? So once I'm in a position and I can say I've seen a failed breakout, that should also be a reason to get out. And again, worst case scenario, I'll just reset it, right, and wait for it to break out over 322 and then look to ride that move. So like I'd say great thing to write down in your journal is when you're setting something up, the second you've entered the trade, write down on your piece of paper, this is what I expect the move to do, right? I expect it to break out over 322 and then continue to hold those highs. or I expect it to pump higher, right? Be specific in that. And then you give yourself a binary, right? Either it breaks out and holds 322 or it doesn't. In this circumstance, right, you see the clear failed breakout above that price. So should give you enough time, right, from 322 to, let's say your entry price was 308 to be able to get out. And I think that's probably where those trades where I close with a small win or finish at break even or whatever, that's ultimately where a lot of people don't make the same decision. They see the failed move and then they're willing to get stopped out at their original stop loss price instead of just taking either the small win or the small loss. And I would say that's probably a very big difference between me and a lot of traders here. All right. So it's like, because I have in my head a detailed plan of how I think a strong move would look like, I can then also have in my head a detailed plan of what a strong move isn't, right? Effectively the opposite of my breakout plan. So if I see a failed breakout, I see a whatever, muscle memory dictates that I should just get out. And that's, I think, a big spot where I will make money or break even, where people will lose money. Because in their head, they don't have that plan. So they get like a bit of that hopium, or they get a bit of that, maybe I'll get bailed out here, or whatever it is. And because their plan is ambiguous, or their idea of their strength is ambiguous, when the move fails or doesn't behave as strongly as they'd like, because they haven't visualized it beforehand, it makes it harder to have that like quick twitch exit, right? That you need to be able to exit protecting your position. And that, that for me is a really important distinction. That makes sense? So as like a rule of thumb, the less specific your trading plan is, and the more that you're like hoping to see the right reaction after you've gotten in, but you're not sure what that looks like, or you're not specific over what that looks like, the easier it is to basically build that hopium and then get like paralyzed to make a decision. And that's what we're trying to avoid. All right. Anything else here, team? Gosh, I cannot get rid of this cough. I've got all those hacks and stuff, but there's only so much you can do when someone freaking coughs on you for 9 hours. Disgusting. Okay, guys, final call here. Bit of a boring day, but didn't lose money. Can't really complain. Yeah, we'll see what the market has in store for us tomorrow. But hey, to be honest, it's kind of nice to have like a little bit of a dopamine detox day here today. Last week was very heavy on the dopamine. So it's okay to like slow down, remind ourselves that not every day has to be chaotic. And I think we can be proud of the quality of our decisions and know that high quality decisions lead to high quality P&L, but that's a lagging indicator, not a leading one. All right. So same deal like always, right? If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic trading day. Looking forward to catching up with a few of you here in one-on-ones later this afternoon, and then doing hopefully a bunch of filming for that psychology series. Did a bunch of script in here this weekend. So we'll see if I can get that done hopefully by Friday. So keep an eye out on the Discord. There might be some new stuff dropping here next couple days. But besides that, everybody have yourselves a great afternoon. Well done for being patient and disciplined here today. Not always easy, but remind yourselves, right, that easy isn't profitable, and we'll be just okay. Tomorrow, I promise to not preemptively fill in my journal and jinx myself. So we'll at least control that variable a little bit better. But besides that, have yourselves a great day, team, and I'll see you all tomorrow. Peace.